for traders. Get my probabilities chart up. Yes, I do. Yes, I do. Interesting weekend, huh? Yeah, just ranging around a bit. Too much action going on. Had a little pump earlier. Down up from the first standard deviation, normal distribution to the downside on today's candle. Let's actually take a peek at those real quick. I'll turn these back on so we get a better view. Oop. 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 There we go. All right, you can see the little blue dot right there. Right? It went about $50, about $50 past the 1SD. Sucked up from there. Right now, where are we at? We are at the 68.3% Laplace distribution range to the upside. On our trusty little VRE here, our volatility range estimator, which we've added our normal distribution and Laplace distribution levels to. That's this white cross line right there. So you can see, price right at it. Go right over here. There it is, a little yellow dot right where the price action is. I was fully expecting maybe a quick little move before the end of the day up here around 44.1. That's the first standard deviation normal distribution to the top side. It's definitely been trying. Price action's definitely been trying to move up there. Let's see. This actually looks pretty good. So this daily candle, right? This nice big daily pullback. There was a bear div between price action. Higher high, right? On those two daily candles. Returns, higher low. What do we get? We get a pullback day. This is why we use divergence between price action and returns and not anything else, because anything else doesn't matter. And a lot of the times when you have divergence printing between price action and returns, it won't be printing on indicators like stochastics or MACD or relative strength index. Nothing like that. Plus, those divergences they're worthless in our opinion. When you have divergence between price action and returns, it's telling you, hey, the return on your investment is diminishing. Time to get out of that trade. That's why we do this. This is why we teach people how to use divergence this way. And anybody out there that is saying divergence is hogwash or whatever, when it comes to traditional technical analysis, I'll agree 100%. But when it comes between divergence between price action and returns, I'll go up against anybody that wants to argue that point. And if they want, we can have a trade-off. You can use whatever you use. Alpha Trading will use what they use. And we'll see how that goes for you. You're just going to be another one on the other side of our trades, right? Whoever you want to have a trade-off with. We've got several good traders in here that'd be willing to take that. So where are we at right now? $43,300 Bitcoin. You know where were we at a year ago, right? A lot lower. So, like Bitcoin does right now, we're shaking people out of positions. I say we because I am a long-term holder in Bitcoin. Let's see here. But right now, yeah, this is actually looking good. So if you look, there is on this yesterday's daily candle, it is a lower low from this big dump candle here on the daily, right? This was a lower low. This was a lower low, okay? These are all higher lows still. So this is going to be interesting to see how Bitcoin reacts coming into the new week here. We've got, let's see, time. Okay. Did the institutional futures open up in about 2 hours? About 2 hours, we'll see futures open up, and then we'll get a good idea. They did close before the weekend at about 42.5. But there's what people need to understand, right? You've got a lot of institutional options, institutional futures. Do you guys realize that 85% of the Bitcoin option volume is on Deribit? Durabit doesn't close down. Do you not think these institutions are trading on Durabit? Of course they are. Of course they're trading on Durabit. So that's why I don't put too much. That's why I've never put too much weight on these silly gap boys. Oh my God, there's a CME gap. It's all bullshit. It's all bullshit. All right. Let's see here. Because these guys are trading on these exchanges. I don't think they're not. So that would be a great move to the upside. Let me see here. Take one more peek at something. Okay. Let's turn back on these projection bosses. There we go. So on projection boss 2, when we're charting this down move right here, okay? Why do I do this? Because there's a lot of things that happen during this projection that is telling me this is very valid to start this projection here. The projection started back here. A lot of things happened during that projection. It was telling me, hey, the volatility's changed too much out here in the future. You need to start another one. So let's see. But this was the run up from 28. Yep, 28K back up to 53. Then we had a 4-day pullback. Now you can see the 95.4% Laplace distribution range supported the price action right here, right? We actually bounced. We had this good day right here, right? Then we open up a new day, immediately pulls back, tests that 95.4% range again. Bulls are like, yeah, we're here. We mean business. What else did it test that day? It tested the 95.4% Laplace distribution range on that daily candle, not just the projection one. That little yellow dot there was right there. These are the confluences I look for between the current daily candle projection probability levels and the projection levels. Then we finally got up here above the 68.3. Started making a run for the 95.4 to the top side, had a pullback. What did it do? It came down and tested the mean of that projection to almost $1. Had a couple tests. There was another wick that got within a few $100s. Then we come down on this daily candle, and it pretty much gets halted right at that mean again, pulls back next day, daily candle goes up. And from this projection, from that daily down move right there on this big candle, you can see that wick came up, tested this 68.3 Laplace distribution on the daily candle, plus it tested the bottom side of the 95.4% range. All right. So then we drop, look at the wick. The wick comes down, tests the 99.7% Laplace distribution range. Pulls up from there, had a couple great days, came back down, tested the bottom side of the 68.3. Same with today. When price went down to 40,700, is that where we dropped to? Yeah. Tested the bottom side of that 68.3. Now, boom, we're right back up here. We're above the 68.3 on the daily, and from what I'm seeing on the charts, we could have a possibility of this thing pumping another $700 for the end of the day, testing that 1SD range, right? And so then you'll get the gap boys going. But CME's closed at 42.5, so we're going to have like a $1,500 gap. Price is definitely going back down there. You know what? This is a different ball game when it comes to Bitcoin. There's gaps all over the place, right, that have not been filled. In our opinions, those gaps are absolutely worthless. It's a random market. Volatility is dictating to you what is going to happen in a random market. That's why we trade volatility, probability, and statistics. Let's see here. Down a little bit. Just seeing if I want to slam a projection on here from anywhere else, and I do not. And that's enough on the probability chart here. Let's go back over here real quick, though. And this is also, you can throw a PB1 on this 15-minute volatility price range, or volatility range for price action chart, or volatility range estimator. And it'll help, right? So right here, in this move, when we bounce off, this blue cross line was the 1SD on the daily. When you bounce from here, and say you got into a position because your other charts are telling you, yeah, we're going to get a bounce from this 1SD on the downside. So you want to plot You want to plot this probability, this projection boss, right? Now look right, and this is the 99.7% projection. Okay, and so look at this first big candle. Where would I have taken profit? I would have been taking profit right here, and you can see it immediately pulled back. Right now, did it continue up? Yeah, but when you're scalping these low time frames of volatility, that is a great place. As soon as you start to project this, right? Say you see this move starting, you're already in the position, you are noticing that this 99.7 range is running when it's running right through this daily volatility range. You're just waiting for that candle to go up there. Bam, take profit right on the top side there. That's exactly where it was matching up. Perfect. Boom, you got your profit. And now you would be looking for another entry. Now, if you're trading like a 5-minute or a 1 minute, you probably could have got back in this position, right? Maybe rode this up to, where'd it go? 43.8 before it pulled back. And look where it pulled back to. Look at these candle closes. That's the 68.3% Laplace distribution range on the daily, right? On the daily, using the higher time frame input that we do have on that indicator. So it's been hovering right around that 68.3 the rest of the time here since about 3 o'clock in the morning Pacific Standard Time, 6 o'clock Eastern Standard Time. It's just been going sideways. This is the 15-minute. So this actually, I mean, to be honest, this to get one more big, just like this little pump we had here. We have another pump like that. This is going right to the middle of the monthly volatility range, right? Right up there at 45K. Wouldn't shock me at all if we ran up there real quick. Had a couple 15-minute candles like this. We're there. We're there. You transfer these babies right over to here, and I'm not talking fractal bull crap. I'm just saying, look at the move that happened right here on 3 15-minute candles. You have it right here. You're sitting right at the center of this monthly volatility range. And the projection from the beginning of this move is right there. So interesting. Turn off. Oh, I know what I wanted to do over here. Second. Turn off these projections. Boom. Now I want to go on to the index. I believe that's it. Yes. I'm going to go up. Pop this on the weekly. Really going to change? There you go. Okay. Yep, 40.7. Yeah, that's okay. Come on, there you go. And so I've talked about this on streams towards the end of last week. We get this weekly candle, right? We open up right here. It immediately dumps. Where's it dump to? That yellow dot right there is the 95.4% Laplace distribution range. Okay, now, let me show you something. Actually, that was on the weekly. I don't have the weekly in this chart, so it's not going to work showing, which is fine. But that's where price bounced from, right? And if you were paying attention, that would have been a great entry, right? That would have been a great entry. So, are we right now? Like I said, I was talking about by the end of the week, I thought maybe possibly, well, and that end of the week is coming in about 4 hours. So I was looking for this to be up here around 46K. Right here, that yellow dot inside the candle, that is the bottom side of the 68.3% on the weekly. Let's throw this on the monthly real quick. So now we've still got, what's the date? Whatever it is. I know we got under a week, right, to the end of the month. The bottom side of the 68.3% volatility, or 68.3 probability level, is at about 47.5, right? 47.5. Yes, that is it. So maybe in the next 5 days or however many days we have, driving me crazy. What's a freaking date today? 26. So yeah, about 4 or 5 days. Days are in this month of 31. Let's see here. So maybe in the next 5 days, coming into this new week, because from what I'm seeing, there could be a little bit of a pump in our future, and that wouldn't shock me at all to go up here. close, right? Now that would close as a bullish little doji at the end of the month, right? You can see we close right on that yellow dot. You're going to have a little bit of a blue sliver of a candle right here. It's going to be almost a perfect little bullish doji. We'll see what happens though. We will see what happens. Now, go to the 7-day real quick. See what's going on here. Well, look at that. Isn't this amazing how this works? When is a 7-day, 24th? This closes, so this 7-day closes right at the end of the month, right? And probably towards the end of next week, right in the middle, Thursday, Friday, whenever it is. See that little blue dot right there? So on a weekly, the price action went down and bounced from the 95.4% Laplace distribution range. On this 7-day, which we just got on the 24th, so literally yesterday. So this pullback down here to 40, let's see, what's that? Look at this. So the 1SD to the downside normal distribution on this new 7-day candle was 40,685. We pretty much tapped it to the dollar within literally about $50. That's where price action went. And that was actually in the middle of the night, right? When it went down and tested the 1SD on this daily. So look at the last 7-day candle. This is where it went down and tapped the 95.4 on the weekly. It went by the 95.4 on the 7-day candle, but it tapped the first standard, or is that the first? No, second. It tapped the second standard deviation normal distribution within about $50 right there. This is why we use these levels. They are always in play. And it's going to tell you right now, if you understand that 80-90% of the trading going on in this market is being done by high frequency trading firm algorithms, you'll realize what they're programming their bots with. It's not hard to understand this. That's what we try to pound into people's heads. Do you want to trade with the smart money, or do you want to trade with the numerous amount of retail traders out there that the smart money calls dumb money? And there's a reason why. Because of the 90-90-90 rule, which I've changed to the 90-90-30 rule. 90% of traders lose 90% of their trading account within the first 30 days. There's a numerous amount of reasons why they use that money. Whether it be freaking using too much leverage, getting bad entries, buying tops, shorting bottoms, not using distribution levels to understand where you're at. You see what I'm saying? Like when these prices are dropping down to these distribution levels, the last thing you want to do is get in a short, right? You actually want to see, you're looking for a bounce there. Usually you're going to get a nice bounce, but you wouldn't believe how many people will literally short distribution levels or long distribution levels. It's ridiculous. And then they wonder why they're losing money. It's not hard. You don't have to wonder why. And so even on this 7-day, let's actually see the week quick. Yeah. Yep. We get a little pump here by the end of the day. Let's say we do go up there to about 44. Boom, boom. We're gonna have some bull div between price action, lower lows here on these two bearish candles. There's already some div. You can see that it is a higher low on the turn candle. I like to see a little more, and right about there is where it pull up to if we go up another 1K. So that'll be interesting. Now this new 7-day was definitely. There we go. I'm looking. Yeah, that's a little better. All right. So we will see right now. And on the 7-day, you can see we just pulled back up inside the bottom side of the 68.3. This is the 7-day candle. Okay, so perfect. We dropped below it, bounced from the 1SD normal distribution, and now within the same day, we sucked up inside the 68.3. That's what happened. Why? Well, you have a 68.3% chance of it closing in this range. That's where you need to learn what these distribution levels are telling you. It's math. That's all it is. It's giving you percentages, right? And when you know what the percentages are, you can trade with the smart money. Let's get that straight first. It's not hard. Let's go over onto Hello Sweet Pea. Okay, wow, what is this 15-minute chart I got set up here? So this is why we love these deviation bands, right? And we're also, right now, this is just plotting the normal distribution deviation bands. We're gonna add a little function before we publish this indicator. We're gonna add Laplace distribution deviation bands, so you can choose in between. Because a lot of these times where you do see these little random wicks, all these little random wicks, when we're just going sideways, they're probably hitting the Laplace distribution 68.3% range. That's something we noticed when we started plotting them on just regular distribution levels. When we were just like, this isn't going anywhere. Okay, well, maybe it's going to the 0.5 standard deviation on normal distribution. But you plot those Laplace distributions, when you get those little doji candles sometimes on the daily, it's ranging in between the Laplace distribution range. That's all it's doing, the 68.3. This is why we use this stuff, ladies and gentlemen. I'm telling you. Pull this up. Right now, you can see on these 15-minute candles, right? So bands are squeezing. Closing 15-minute candles above this white line is the Gaussian mean of these deviation bands. We could get a launch point from here. We'll see. Doesn't have to happen, but more than likely it does, especially when I look over here. So I've showed you before on our trend machine here with the power means and the log MAs. When you get below these power means, you will have price action come back up, test these power means, and have more dump outs. It works this way too. It works to the upside too. So you get a pump, price action comes down, test these log MAs. Then it came down, tested this top power mean here. Now it's bouncing off it. Do we get another run up, just like sometimes you get a dump? We're about to find out, because we are moving into the close of or at least till the opening of the institutional futures. Which, like I said, I don't like to put a lot of weight on that. But it does seem like every once in a while you will get some movement. You will get some movement in that time. We did just have a big options expiration, though, right? $3 billion of options expire. What people don't realize, like, that if you're just buying futures, if you're getting into long-term positions on futures and wondering why you get wrecked, that's not what futures are for. We scalp Delta. We scalp the futures. We don't sit in the positions, in and out, in and out, in and out, right? That's what they're for. And you know what they're really for? They're to hedge your options positions. That's how you hedge options with futures. Okay, depending on whatever you're doing. You're buying premium, selling premium, whatever you're doing, you can use options to hedge your position. So if you're just blindly like getting into like a really big perpetual future position, it's never a good idea. Especially you're paying funding, because very few people are like longing or shorting farther out expirations of futures where you don't pay funding. That's why you're actually, there's a premium already built into the price. That's what you're paying for. So you're paying funding and stuff, and you start getting a run up to the upside. It's just eating away at your profit every time you pay funding. I mean, I know people, they just sit in these futures positions forever. Why? Especially when it's like up, down, up, down, up, down. Hell, you could be trading both sides of that if you understand volatility trading. That's our whole freaking point. Let's look at the volatility here. Positively correlated, expanding on the 15-minute. Every AVR. Beautiful. DLP start. Log return candles are starting to build to the upside. Standard error bands are moving up. Especially because they pumped up on top of these standard error bands, we could get a pump here. We really could. Everything I'm seeing on this chart is showing me we're about to get a move to the upside. Let's see. Is there any? Yeah, there was. And we're going to try to fine-tune the algo that's printing these divergences just to make them a little bit better. And this is our alpha trading Wolf's Bane indicator. There we go. Let's pull this in. And this is a triple oscillator, right? And we call each part of this, right? Alpha 1, Alpha 2, Alpha 3. If you come in, you buy the indicator package that we're going to be selling, that's going to include this badass indicator. I'm telling you, when you learn how to read this, it's going to change your trading, especially if you're using it with our VRE, which is one of the other indicators that are going to be part of the package, right? Powerful, and a volatility panel that's going to melt you down, melt your brain when you see how all this works together to tell you what's going on in a random market. When all these traditional technical analysis people, they're using all kinds of silly indicators, right? And then they're wondering why do I keep getting bad entries? Well, number one, you don't understand. The only thing that matters are indicators based on returns, right? That's what all these are. All these indicators are based on the returns, right? That's what's powerful about our indicators. Let's see here. I'm going to go to a 4 hour. What's happening up here in the 4 hour? Was that some bull div? Yes, it was. That's what we got this 4 hour pump. You can see this bearish candle here, this bearish candle here was a lower low from that candle. Here's the returns, right? Here's a return oscillator, part of the three. They're all based on returns, but this is one of them, right? Here's a low, higher low, bull div, up we go. That actually brought these price action candles up above the Gaussian mean again. So here's what I like to do. What is this band 4 hour 43.6? Yeah, it's not too far, but I bet this one's right up there. 44.3. So I'm gonna go over here. 44.3. Huh? Yeah, it's just right above the 1SD. It's right here, just barely above it. It's actually right above this skinny blue line here. Is the first standard deviation normal distribution on this last 4 hour candle. Wouldn't shock me at all. We get a run up here real quick. Wouldn't shock me at all. Considering this. That looks good. Boop. This is how we use all this together. All right, ladies and gentlemen. This is what we do. And the 4 hour is expanding again positively. Tell you what, man. We could have a ripper in our future here. I mean, it's pretty obvious what's Bitcoin. I don't know. I just trade the volatility, but there's a lot of things going out there in the world, right? There's a lot of things happening with Bitcoin. And all these people that talk down about Bitcoin, they don't realize they're just advertising for Bitcoin. That's all they're doing. Like Peter Schiff, our little resident gold bug, who is a moron in my opinion. Did he make a lot of money off gold? Sure. Now what? I mean, what? I don't know how these guys don't realize that the metals market is the most manipulated market out there. Hell, these big banks, they've been fined time after time after time. How many times have they been fined behind the scenes and the public doesn't even find out for manipulating gold and silver? Who was the last one? JP Morgan or whatever? Or Chase? Somebody manipulating the hell out of silver and gold. That's why it's not doing anything. And that's why all these gold bugs that are sitting around on the shiny rocks are like, I can't believe gold's not moving. The dollar's worthless. Why isn't gold going up? Same people that are running the fiat money scam are manipulating the gold and silver. Just ridiculous. Meanwhile, you're not realizing what the future of currency is, and it's right in front of your eyes. So right in front of your eyes, right? I don't have to talk up Bitcoin. I'm invested in it for a reason, right? It's the future. There's always like when we got when we got trains and automobiles, right? It was just like there was people like, no, I'm not giving up my horse. I'm gonna ride my horse. I'm never gonna ride on a train. I'm never gonna ride in a car. And it's just like you can still have both, right? But it's like what a horse is mainly used for today, not to travel. Maybe ride around on your ranch. That's why. And it's just like take the music industry, right? I mean, what did these people? They just didn't want to. They didn't want to go into digital music. They wanted to keep their record stores and and all that other crap. And they're out of business, man. They did not conform with what the future was telling them that where the industry was going. You know, I don't feel sorry for those people. I mean, it's pure ignorance, in my opinion. So let's go. You know what? Let's go to power time frame. Power time frame alert. I don't even know why I even pull these. I mean, it's like some of the stuff I talk about. It's like I'm dropping gold nuggets on people, and there's a lot of people out there that'll just be like, because the things I talk about don't fit into their little psychosis that they're dealing with in trading. Mind you, they're probably not even profitable traders or even trade at all. But it's like, I mean, I share stuff in here like the 90-minute, the 45-minute time frames. If you understood how powerful these time frames were, you'd understand, right? You'd understand. Let's see. And like right now, okay, we've got one of the alphas in the area and the blue line, right? They're both right now printing hidden bullish divergence, which is a continuation divergence. So it wouldn't shock me at all, right? Look, I'll show you right here. So you see the bottom right here on this blue candle, right? That is a higher, that is a higher or a lower high. Sorry, that is a higher low. Okay, see it? There's where that candle opened. There we go, higher low. Look down here though. You have a lower low, right? Boom, 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 boom. We've been bouncing ever since on this 90-minute. What's this 90-minute close? Half hour. So we got like one more 90-minute candle after this going into the end of the day. Is that correct? Two. Sorry, two 90-minute candles. Wouldn't be a bit surprised if we, in the first standard deviation band right here is right at 44K. Right at 44. About another $550 above us. Let's see. 45. Dun, 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 dun. Yeah, the 90 minutes, the one that's got the hidden bull building, printing. We close this 90-minute, I'll tell you what right now. Because it did print. It did print. So there is hidden bull. And we're going to try to get this algorithm to print the hidden divergences as well. And the thing about divergence, it's not hard. You just got to study it. You got to know what you're looking at, right? The biggest problem people have, they get confused in the beginning, and they'll be looking like at the top side of price action candles and the bottom side of an indicator. That's not how you do it. If you're ever looking for regular divergence, right? If you're ever looking for regular divergence or bullish divergence, you want to be looking on the bottom of price action and the bottom of the oscillator, right? If you're ever looking for bear divergence, you want to be looking at the top side of price action and the top side of the indicator, right? That's how that works. So something like this on the 90-minute where, let's go back. So right over here, right? So it's printing a hidden divergence right now, okay? It's printing a hidden divergence. You literally have a higher high in price action and you have a lower low on the indicator. But what can that turn into, right? So right now, if we get a big pump and we have a higher high in price action, but we have a lower high on the indicator, what's that going to do? That's just going to print bear div. So they work back and forth, all the divergence. Divergence is what's moving the freaking market. Straight up, I'll have an argument with anybody out there about what moves these markets. Who's going to have all the information to back up that statement? I am. Totally. Especially if people don't understand divergence. I'll literally show you. I'll go down to a 1-minute chart and show you how all this randomness in price action is it's divergence moving it. There's an imbalance in the buy and sell pressure that's moving price action around. So that's why divergence is huge in trading, especially when you're looking at indicators and its divergence between price action and returns. Okay. And if you already have our indicators, pull up one of these bullshit traditional technical analysis indicators, right? Set it up on the same lengths and see the difference, where there'll be div between returns and price action, but no div between price action and RSI. Happens all the time. We've done studies where it'll be like, say you have 10 times the returns shows divergence. It'll be, I'm not saying that RSI won't print it ever. It's literally like 3 to 5 times in that range where the RSI will actually show some divergence. It's ridiculous. Why wouldn't you? That's what I don't understand. It's the divergence between price action and returns that moves, that creates the randomness in the market. That's what creates it. Okay. Boom, boom. What are we at? 43.6. So we are moving up a little bit. And actually, it makes sense. So on the 90-minute, we're on, what was that, the 15? Everything was expanding, positively correlated. On the 90-minute, we're contracting, negatively correlated. Either way, price is going up. Let's see, and right now, though, so this is what I'm saying. We get a big move up here. If we get a big charging move up, you're going to want to see at the close of this 90-minute, you're going to want to see this blue oscillator. You're going to want to see it make a higher high above this point, or that's all it's going to do. It's going to create some bear div, right? Same with our DLP, our deviation log, our deviation log pro. This is log returns, right? Weighted with deviation. Very powerful indicator. What's it building right now? It's building bear div 2, right? So is the oscillator that we have in area form here. You can see all these. So you're going to want to see this pink line right here. Really, I'll tell you what, if we see a big move, you're going to see this pink line right here turn white, just like you saw this pink line turn white. And here's what's real interesting, right, is what this is. This is actually in the area. This is based on the Z-score, and it's a Z-score based on the log returns. So when you see a move like this going to the upside, you need to understand that when the Z-score is going up like that, you can have price action come down. You can have price action come down. Now, why? Why did this price action come down? Well, number one, you got variance coming down positively correlated. When you have variance coming down positively correlated, you're going to see price action walk down. Okay, you're going to see price action walk down. The returns oscillator was heading back down. But you can see lower low on price action from this candle and this candle, but then down here. So if I'm looking for bear divergences and I'm on the downside of price action, I want to come to the downside of this returns oscillator. Higher low. Created bull div, green line prints, boom, we get a big bust to the upside on that one 90-minute candle. That 90-minute candle move, $2,200 in 90 minutes. Yeah, I shook my head. I mean, this stuff is not hard. It's not easy at first, though. You got to study this stuff. And I'm talking about, you got to put in a lot of work. You're not just going to start looking at this chart and understand what's going on. But if you give it some time and you see the different divergences building, right? You'll start to get it. You'll start to get an idea of what could possibly be happening, right? And it's going to tell you when the return on your investment is diminishing. That's all you want to know. That's all that matters. Doesn't that make sense? Well, if the return on my investment is diminishing, whether it be a long or a short, doesn't that mean, well, shit, I should probably get out and take my profit? And that's what people don't do. And it blows my mind why people don't take profit. Yeah, big time. And that goes back to the 3 rules. And pretty much the most important one is, but I don't put it in that order, is don't be emotionally attached to your trades. That is the only trading psychology you need to understand. All the other trading psychology seminars and books and all this crap out there, it's total bullshit. Okay? If somebody's trying to tell you about trading psychology, they're selling a book. They're selling some trading seminar or psychology seminar to tell you, well, are you using a journal? Right? Did you write in a journal what your feelings were when you got into your entry? Does this make any freaking sense? It boggles my freaking mind how people fall into this trap and think that type of psychology has anything to do with trading. When the only psychology that comes into trading is don't be emotionally attached to your trade. Because if you are emotionally attached to your trade, first you're not going to take your profit. Right? Because you're like, oh, I'm going to get more profit. I'm emotionally attached to this trade, and I know it's going higher. The second thing is you're not going to be able to limit your loss if the trade turns around on you. Because as a volatility trader, you don't have a stop loss in the system. It's stupid. These exchanges can see where your stop loss is. And chances are, if you're a traditional TA trader and you're in that goofy percentile of people that do this, all your stop losses are in the same spot because you're all taught the same damn risk management strategy. You got CEOs of these hedge funds and these high frequency trading firms. They're laughing their ass off about this stuff. Guarantee it. They love this shit. All you goofy retail traders are out there putting stop losses in the same damn area. Do you realize that these exchanges probably have algorithms? Not probably. They have algorithms that will recognize when a certain percentage, I don't exactly know how it works, but when a certain amount of what's their trading volume that's happening in the moment right there, you get a certain amount of stop losses in the area. That's where you get these big wicks going the opposite way all of a sudden out of nowhere. They go down, they stop everybody out of their positions, then they suck back up and go right in the same direction. This is why you take profit. This is why you don't get emotionally attached to your trade, right? And I'm not going to shame any swing traders or long-term traders, but that's exactly what you're doing. You're becoming emotionally attached to your trade. I'm going to be a millionaire. I'm just going to sit in this futures position forever and I'm going to make a fortune. That's not how you build a fortune. Do you think that's how high-frequency trading firms are building a fortune? No, they're trading every damn little move up and down, up and down, up and down, up and down, up and down. That's how you build wealth. Understanding really how to trade with the smart money. Do you think the smart money are sitting, or do you think smart money is swing trading? If you do, you're wrong, because they're not. You go out there and you talk to any freaking any developer out there that's developing for these high frequency trading firms, these quant firms, right? Any quant developers that are building software. You think they're building software for for these firms to swing trade? No. They're building these algorithms to trade off volatility, probability, and statistics. They take their profit all the time, often. Trust me, up and down, up and down. You drop down on the 15-minute chart, and it's like, you think they're just sitting in these positions? They are trading up, down, 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 up. Repeat, repeat, repeat. All right? Wash, rinse, repeat. That's what these guys do. And so people will be like, "Oh, so did you work at a HFT or something? I'm like, no, not at all. I've never worked in the industry at all. I learned all this myself by actually trading, right? Researching myself. I wanted to know, how is smart money trading? Why does smart money call retail traders dumb money? And why do all the dumb money not recognize they're being called stupid? I mean, it's even all out there. You think at some point you'd go, why am I dumb money? Oh, wait, well, I guess I'm stupid because I just lost all my account. I mean, it should spur you to want to know how these firms are trading. And once you start to do some research, you'll figure it out real fast. You will figure it out real fast. So where did we just hit? Let's see if we can get by here. So this is the last 4-hour candle right here that we just got at 1 o'clock. This little white line right here that's rejecting price action. That is this 68.3% Laplace distribution range. I've literally seen days go by where every 4-hour candle, like where you think price on a day, is just doing this little range of about $1,000. You guys, it's not doing that at all. You'll go through a whole day where every 4-hour candle, it's just ranging in between the 68.3% Laplace distribution range every 4-hour candle, whether it be moving up a little bit or down a little bit. Or then there's some days where it'll work out where price action is just ranging in between the daily 68.3 range, right? Just ranging. And that's about right now, it's about $1,100 range between the dailies. Usually the 4 hours about half that, about 500. That's what it is right now. It's about a $500 range. See the bottom side right now. It's about $550 range right now. So you'll see that. You'll see that happening a lot. And when it gets in a rhythm like that, realize what's going on. Those algos are just bing, bong, bing, bong, bing, bong, just pounding around in there. So if you recognize a little trend, a trend like that that's going on, where you just see price action just trending, but man, you look at a 5-minute or 15-minute chart, you're like, wow, I wish I knew how to trade those little up and down moves. That'd be great, because you're not going to do it with Stokes or RSI or any of that crap. You're going to get wrecked. You need to know where those levels are at. You need to recognize the trend if that's what's happening. Man, it'll change your game. It'll change your game up for sure.
Hey guys, MJ here, just giving you a heads up. Today is going to be split into 2 videos. So Sunday Fun Day is going to have 2 parts. Hope you enjoyed part 1. Part 2 will probably upload tomorrow night, as me and Bilbo are going to be out doing various things Monday, Tuesday. So enjoy, happy trading. Talk to you guys later.